Well, good Friday morning, everybody. I'm Marlon Bowling with you, your tour guide to the ag commodities. Oh, I hope you had a good one. We're going to be looking forward to what could be a very interesting trading day to wrap up the week here. To talk about it, I want to bring in the president of Midwest Market Solutions, none other than Brian Hoops. He joins us this morning from Springfield, Missouri. Brian, great to have you with us here as we get ready for today's session. Of course, we had the presidential address last night. All eyes seem to be focused on the Middle East right now, but we still have the economy to deal with and all sorts of other stuff going on, South American growing weather, and you name it. So talk to me about what you're going to be watching for in today's trade here on the grains.
Yeah, good point to bring up, Marlon. You look at charts of some of these markets, crude oil really taking off and rallying, gold, silver seemingly establishing a bottom and gapping higher a couple of weeks ago and moving sharply higher. Then you see the grain markets kind of doing the same thing, where we slowly have been working our way higher in corn and soybeans, and now soybean meal really exploding higher. So there's a lot of markets that are starting to move in a direction that is favorable to our producers. So, if you're been harvesting and looking at making sales, corn market is about 40 cents off of its lows, looking like it wants to try and continue to move higher, albeit slowly, based off of some of the fundamentals that we have. So weather in South America is going to be one thing that's very critically watched. It's been parts of northern Brazil have been hotter and drier than desired. And those areas are going to be our watching. Now, there's chances of rain next week for that area, and then it is expected to return to more hotter and drier trends. And that is something that's catching the trade's attention, because there's talk about replanting some of the corn, soybeans, but mainly soybeans in that area after a drought in Argentina. There's prospects, at least right now, for these hot and dry conditions in northern Brazil to curtail some yields, and that's one thing that's really catching the trade attention.
Okay, so you mentioned the soybean meal trade. Now, why would that be singled out to make the biggest move?
Yeah, the traders have kind of been holding a lot of short positions, and there's a lot of covering of those positions, especially in the wheat is starting, the corn market is starting, soybean meal as well. Argentina was the world's #1 exporter of meal. Last year they had a drought, and that's put a big premium into the U.S. markets. We've really taken a large share of their exports and turned it into our exports for our country. Earlier this week, we saw the NOPA crush report. It had a record crush for the month, and it's expected that we will continue as Argentina is out of the market until really into the winter months, and that means the U.S. is filling that void as far as soybean meal exports. So we haven't seen a sale in a couple weeks or a couple days, but we did have a sale of meal to the Philippines earlier this week, and that bodes well for future sales, I think, as we go forward here in the next several weeks and into the months ahead.
Now, let's bring that soybean meal screen back up here again, and I want to get your thoughts on something. As you look at this, typically in the grain markets, you see carry building in the market. In other words, the futures prices get higher as you go further out in time. Now, it's just the opposite here on the meal. It goes backwards. Why is that?
Okay, well, it's an interesting point that you bring up, because you have that carry in soybeans and you have a big carry in corn. Those two markets, but in soybean meal you don't, and it's because the market wants that product right now, and it's paying a premium for it. There's no incentive at all to store that your product and not ship it out into the summer months. It demands the product now, and it is paying a huge premium to receive it. That's usually a sign of a real bullish market. I think crude oil is another market that's set up that same way. The demand is higher now, and the market wants it now. So it's there it is. It's bringing up. It wants your product. The December is a couple dollars premium over the February, about $3 over the March. So there's a premium there. That tells you that type of market. That's a bullish market scenario.
Well, I'm glad you went there. Crude oil, West Texas crude, as we're looking at it, November futures now 76 cents higher again overnight and this morning. We're now at $90.13 per barrel. So yeah, we're back over that $90 mark. And who knows what happens if they, like you say, light that fuse in the Middle East over the weekend. On the wheat trade in Chicago, we're 3 higher on December at $5.97. Got as high as within one tick of hitting $6. Didn't quite hit it. In Kansas City wheat, December up 3 3/4 at 6.80 this morning. And in the Minneapolis market, December is down a penny and a quarter. We're trading at 7.37 3/4. Cotton market, for whatever reason, has just really struggled this week. And again, we're down 184 points today at 82.43. All right, on the wheat trade, a quick thought here on the Chicago that had been gaining on the Kansas City, but it seems like maybe it's gaining some of that back now.
Yeah, there's a rain event slated for the winter wheat plains areas next week. So I'd be surprised if Kansas City can hold onto these gains. There's also a strong seasonal tendency for Kansas City wheat to fall under some pressure in here. So today's kind of a sell date for that hard red wheat. It may start to give up some of those gains against Chicago, against Minneapolis, based off of those two fundamentals.
Okay, well, we have another report to talk about later on today that'll be related to the cattle industry. Yep, we're going to get our cattle on feed report later today after the close, and we'll talk about that in our next segment with Brian Hoops. Come on back. Well, I'm talking with Brian Hoops of Midwest Market Solutions here this morning as we get things ready to open up on the daytime trade. Before the break, I commented on the fact that we have a cattle on feed report coming out today after the markets close, Brian. It'll come out at 3 p.m. Eastern Time and 2 p.m. Central. Here is a look at what the trade thinks we could see in those numbers. It's based on a survey of analysts all around the country, and, well, Shazam, I see you included in the list of analysts here. So anyway, the average trade guess for the on-feed number comes in at 99.7% of a year ago. In other words, just slightly under a year ago level. Placements would be 101%. And we have the marketing is expected to be 90.4%. Wow, that's pretty low. This would seem to indicate some herd rebuilding. Now, your numbers come in a little different than the rest here. Explain where your numbers are in this mix and why.
Yeah, we're not too far off on the on-feed numbers and the marketings. It's a placement number that's kind of the wild card. We are a little bit under 100%, figuring that maybe we're not going to put as many into the feedlots quite yet because of the weather in the southern plains. We're getting moisture, grass is growing, and so I don't know that we're putting as many cattle back in that feedlot as we're going to keep them on grass maybe another month, and then placements will start to tick up next month. So that's kind of the rationale that I'm operating under. We'll see what the trade says. And it kind of there's several different surveys out there that we participate in. And one has the average guess under 100%. One has the average guess, as you showed, over 100%. So there's variations, a lot of people thinking different things, and that's what makes a market. But we did see stronger cash trade this week. That was a really pleasant surprise, couple dollar gains on a dress basis and in the Southern Plains. Yesterday's sell-off may be deemed as a little bit overdone based off of that cash market. So maybe we follow through on the opening, but I wouldn't be surprised to see cattle futures try and trade higher at some point going into that cattle on feed report.
Well, for our viewers at home, yeah, you can see where we finished up yesterday. We had the December live cattle. Well, they took a bite out of that. It was down $1.90 yesterday at 185.30. And look at February and April. They were both over $2 lower. So, yeah, we'll see if they can rebound ahead of the report. Feeder cattle, what a headache they had yesterday. November down 5.22 at 244.50. You had January down 5.52 for the biggest loss of the day. But everything beyond October was over $5 lower. Man, that was a big-time washout yesterday. Technically, on the charts, it looked really bad. Lean hog trade just closed narrowly mixed. December was down one tick, February up one tick, and then you go mixed in the deferred months. Should be, a very interesting report when it comes out later on today. Of course, the trade can't react until Monday, Brian, so they'll have a whole weekend to think about it.
Exactly.
And a whole lot of things can happen between now and next Monday, so... yeah, anything goes. All right, Brian, thanks for explaining everything. Appreciate it. You have a good weekend there, sir. Thank you very much. Brian Hoops of Midwest Market Solutions.